Hi theorists, Neil here again, and this is Option Theory, and you are here for a cherry bomb trade. So in case you're new to this channel, cherry bomb trades are something we get 4 days a week from Tasty Trades email blast. The link is in the description below. Head on over. I do not get your email. Tasty Trade does. They'll send you an email 5 days a week. I will call the first day of the week will be your inspiration, and the rest of those are trade ideas with the logic behind them. So with that said, I'm going to change scenes over to my platform here, and we've got Thinkorswim is the platform that we use in the series here for simulated trading. We can see that we have 1, 2, 3, 4, 5, 6, 7 trades on. I believe I closed a trade yesterday. You'll see that in the weekly recaps that we'll do, so that'll be on Monday. All right, so today's cherry bomb, I think, will be interesting for many of you because it's a trade that I wonder would you really put on in real life. But because this is simulated trading, this is a great opportunity to see, put the theory to the test. Can you put probabilities in your favor? And even if it's a trade you think could lose, we'll see how it works out. I'm kind of interested in this one. So with that said, what underlying are we in? So if we take a look at the chart, we'll see here we're in Carnival Corporation, Carnival Cruise Line, right? And you can see the cliff it jumped off with thanks to the pandemic. So with that said, though, we can also see that its low for the year for 52 weeks is $7.80. So the strategy that is suggested for us is a short put, a naked put in this. For some of you, that may be cost prohibitive based on your account size. So you might switch to a short put vertical in order to pull this off. If you were to do this in a real account, of course, all trades are your own, right? I have a little disclaimer at the end of every video. I'm just here to help educate you and give you an opportunity to play along and learn, right? Learning, I guess. Anyway, so let's take a look at that. And so inside of Thinkorswim, we're going to go over to the Analyze tab and the Add Simulated Trade sub-tab. We have CCL in for the ticker, and we're coming down here to the May weekly expiration with 37 days left to expiration. I have my strikes set to all. Your number may be different, so you may not see the same numbers. And here we have our $7.50 or 7.5 strike, right? And we're looking on the put side, and we can see that the bid-ask spread is a little wider, and I'd say a lot wider than we'd like, but that's normal in weeklies. One of the reasons I'm not a giant fan of weeklies, but hey, I enjoyed putting on these cherry bomb trades and seeing what happens. We can see that we're near that 16 delta. One might argue that this could potentially be the better trade. There is more open interest in the 7.5, 750. This one is below, like we said, that 52-week low. So let's left click once on the bid for 7.5, and we'll show you that brings up down here in your positions and simulated trades tab. We see here we're selling short one. Once again, this is a number I've dialed in, and I believe I've done a video on how to change your default order sizes. I'll link to that above, and you can, in a card that'll swipe out, you can tap that to see how to change your default order sizes, because I believe the default order size is 10 on these guys. So we're going to be short one contract, put contract for May weekly expiration, looking to give us a credit of 55 cents. Let's go, what's that difference in there? 25 cents? Let's go 10 cents more. Let's go with 65. Let's see if I can get filled at 65 cents. Who knows? Let's see what happens. Now, I always like to show the risk profile for this here, short put. And wow, that doesn't look like anything recognizable. So let's shrink this up and pull ourselves that way. That's what we want to see, right? Okay. So we want to first change the date to the expiration, which was the weeklies. It's not this one. It's got to be that one, I believe. And we can see that May 22nd. I lied. It's that one. See how I figured that out? May 22nd. All right. And I want to go over here and click this and choose set slices to break even on the expiration. And we can see now we got our current underlying price marker is right here. This is our break even today, and this is our break even at expiration. The blue line is our expiration, and the pink line is today's price point. Okay, so we can see that we have a 77.8. Let's round that up to 78% chance of at least breaking even here. All right, so the probabilities are massively in our favor that this will work out to be profitable for us. Okay, but with a delta of, what did we see? Let's go back. With a delta of 14, all right, that means there's a good about a 30% chance that this is going to test our strike. Okay, so it's possible, you know. But we have that potential profit. Let's see what that is, right? Let's right-click this trade here. We can see our confirm and send. It's always good for you to see this. Repetition, right, helps us learn. We can have a maximum profit of $65, right? And our maximum loss is $685. So if you have, you know, $685 to spend, right? Then this might be a trade worth. If you're pretty confident that Carnival Cruise Lines isn't going out of business, then this might be something worth trying. And we're gonna do that. We're gonna hit confirm and send, right? That's gonna go over here into your working orders. And when the market bell rings at 9:30 is the exact time this video will come out on YouTube. So, it's already out because you're watching it. So that's when this video came out. And you'll see what happens when it fills. All right, everybody. That's it for today's cherry bomb trade on Tax Day here in the US, April 15th, 2020. I look forward to seeing you again.